Thank you for staying with us. Economist Mike Schüssler says South Africa has lost well over 1 million jobs already due to load shedding. He also estimates that after 14 years of load shedding, the cost on the economy is probably close to 1 trillion rand. He joins us now. Mr. Schüssler, thank you for your time. Quite a large number, 1 million jobs lost due to blackouts. Talk to us about that.
Well, very simply put, what we have in South Africa is that we've seen some firms close, for example, the smelters in Richards Bay. We've seen other things not happen. For example, there was supposed to be in the Eastern Cape a new refinery. That hasn't happened. Instead, we've got 3 closed refineries at the moment and very little chance of them starting up. 2 of them probably partly due to electricity at least, and the cost of that electricity. And if we look broader, we can see that other countries during the commodity boom really did very well in the late 2000s, that decade, and we didn't. We didn't participate much. And if we look at it now, Australia is tripling its expenditure, capital expenditure in the mining industry, virtually doubling it in the manufacturing industry. But in South Africa, our capex is still going down. And that tells you that people cannot invest more because we don't have the power. So even if we wanted to expand a mine, we don't have the power to do that. And we can see in the mining sector alone, about 120,000 jobs disappeared in the last 12, 13 years. So absolutely, it's at least 1 million jobs. We've got the highest unemployment rate in the world. We've got nearly 12 million people unemployed. And I think at least 1/10 of them would have had a job if we had electricity. It would have helped business confidence, consumer confidence. Business would have put more money down into infrastructure. We wouldn't have had this debt burden that Eskom now has, and we wouldn't have had as high electricity prices, because a large part of that price is also the debt burden that Eskom has had, and that comes partly from the corruption.
We've spoken about the impact of the power cuts on mining and manufacturing, but farming is also another industry that's been quite hard hit. Talk to us about the impact there.
Well, farming is maybe not as reliant on the electricity, but the products further down the line are. So once you've taken the fruit off the tree, you may not have used electricity, but then you have to keep it cool. Then the other thing is you have to export that product in a certain time at a certain temperature. And because you haven't got electricity, the product doesn't last that long in the cooling, or what they call a reefer container, which is just a refrigerated container. And ultimately, then there were also the problems at the ports, which added to that complex story. Then one can just think of everything else in our food chain that needs cooling to enable that storage or stored cooling when things are stored. And that's from milk, meat, and the like. So it has had a big influence even on farmers. It's had an influence on our ability to export farming product. It's now got an ability, it's now deliberating the train system. We use electricity mainly on the trains. We now have to switch to diesel, but the signals don't work when there's load shedding. So the trains don't move anyway, or don't move far. And diesel trains aren't as efficient and as quick as electric trains. There are other problems there too, obviously from cable theft, but the point is every factor in a modern economy is influenced by electricity. From the hairdresser you go and see, to the telephone call you make, to the Zoom meeting that we have.
And talking about that, the impact on telecommunications, especially in this age where there's been a vast and rather, speedy development in telecommunications, that really must have had a trickle-on effect on, telecommunications companies.
Yes, I think the cell phone companies, you can hear your signal isn't that good anymore. I haven't got precise research, but their batteries just don't last as long when you've got so many load shedding stages. Maybe they're still okay at stage 2, but at stage 4, the batteries don't properly recharge. So people can't connect. And when they connect, obviously some people are talking business, and that business then is a problem in the sense that people want to or don't do the deal, so to speak. So every sense, and the programming that happens, the Zoom meetings that can't take place because one party or another can't make it. Ultimately, it's also cost us a lot to try and overcome all these issues. But when stage 4 happens, a lot of batteries don't last. People don't have all the money for the generators. All those sort of things happen. But every part of our economy, maybe you could say tourism in a game reserve doesn't need electricity, but most parts of our economy need electricity to function. It's really, really critical.
I mean, you mentioned that one cannot be productive in a modern economy without electricity. But one of the barriers that we're seeing now, as well, is the barrier of price and the escalation of the cost of electricity. Talk to us about that.
Well, costs are obviously a big issue when people make decisions to invest or not invest. And South Africa had some of the cheapest electricity in the world. We haven't got the most expensive, but we've certainly moved up the chain, and we're now in the middle. And that means we have to have something else to present to people. But the electricity prices obviously hurt the consumer. My and your money can't buy as many things before because we first have to pay the electricity. It's quite clear that electricity pricing and energy pricing, including petrol and diesel, is quite central to any economy and the sort of inflation rates that you have. A large part of our inflation, we would have had inflation probably around 1% lower if it wasn't for the water and lights accounts, and both of them have increased, the water and the lights, far above the inflation rate. And we would have had much lower inflation, much lower interest rates. We would have been able to afford. So quite frankly, the pricing of electricity is a big part. It's part of the consumer and the business decisions that everybody makes. I just want to point out, though, that it's in South Africa, the price is one issue. But if you're getting a worse quality of electricity, in other words, you don't get it all the time like we do now, and you've just lifted your prices, that is a double whammy. So, if you had electricity at a very low price and sometimes it wasn't there, maybe some people would be a little bit more forgiving. Now we've got, sort of medium prices, but a very low delivery of electricity. So that really puts us out of sync with most of the rest of the world.
Mr. Schüssler, we'll leave it at that for this afternoon. Thank you for putting all of that into perspective. Oftentimes we bemoan the inconvenience of being in the dark and the blackout, but really the economic impacts of not having lights, of being in the blackout, clearly being felt in various sectors. That's Economist Mike Schüssler.